And we're talking about Exxaro Resources, which was able to increase its earnings by an impressive 78%, largely thanks to its coal business and the soaring global demand. But like other companies that rely on Transnet, Exxaro faced major logistical challenges. The CEO Nombasa Tsengwa joins us this evening to unpack these numbers further. And thank you very much for joining us this evening. Let's start with those earnings, an impressive set of numbers that you produced today, as I've just mentioned in my intro. So apart from the coal business, which I said did benefit from the global demand, what were some of the other positive contributors to this set of numbers?
Well, it really emanates mainly from the contributions, mainly from the coal business and its performance. But obviously, we will unpack what in the business has really driven the results. And one of them is, you've mentioned it, high prices that we've seen in the last year. I mean, we've seen in the first half the API 4 price going as high as $448 per ton, but we've also seen the low in the second half. So we did benefit from the prices, but there's something more than just the pricing here. And I'll also talk to the other part of the business, but I think we need to focus on really the matters that we've seen that have really paid the dividends of the day. The other factor, we were operating under a high inflationary environment, which really squeezed the margins to some extent, and we had to really contain our costs. And we were successful to keep our costs 1.1% below inflation, which is a very good performance, under the circumstances. We've also achieved an average price realization of 93% against the API 4 index. And this is attributable to the quality of coal that we have. Very high quality RB1 coal that is very sweet to specific markets, such as the European market, which was really of very high demand. As you know, that the Europeans were in shortage of supply, and we really played quite well there. And on top of this, there was, and maybe just on this the quality, just to explain a little bit more, this quality didn't just come up, by sheer luck. We had to rejig our operations about 4 years ago to focus on releasing any value from these assets so that we don't, at the end of the day, end up with stranded high-quality assets. So evacuation of coal was a demand due to Transnet, and I think the team was just fabulous in really battling it out there and looking for options to evacuate coal to RBCT and also to the seaborne market.
Let's speak a little bit more about that. If you'll let me just come in there, my apologies. That Transnet component that you just mentioned there, you did experience about a 32% decline in export volumes, and you're speaking about a team that was able to weather the Transnet storm, if you will. But speak to us a little bit about that knock and the kind of conversations you're having with Transnet to ensure that this is not the kind of trend you'll be seeing going forward.
Indeed. You will see if you look at our results, which we presented today and what we've shown in the past, our ability to export 12 million tons per annum, and today sitting at a fraction of that, which is 5.2 million tons. This is in the context of the 60 million tons commitment that we've received from Transnet that really sets us at these levels. And we continue to commit 5.2 million tons for this year, 2023, which just tells you that our confidence on what could change in the system is not apparent to us. And therefore, we would continue to look at these options, which really include trucking coal to RBCT. And we know trucking coal to RBCT has got its own limitations, is very costly. And it really is enabled by the price, which was high at the time. And at some point, we won't be able to be trucking coal at a certain level of price, depending where you are located from RBCT and your cost of production. So that option is quickly running out of its own steam. The other options that we have had to look at was Maputo. We know Maputo as well is constrained, about 2 million tons capacity, and also just selling our coal on a free carry option to those who have got export capacity. And that's how we've really battled out and tried to optimize our coal. And as I say, we're not optimistic that anything is going to change, and we just need to continue to work hard at this.
And at the same time, those costs will continue to rise there. Let's talk a little bit about the dividend. You did declare one, albeit about 40% lower than the previous one. What guidance have you given to shareholders around this, despite the fact that you were able to produce such solid results?
Yes, indeed. I mean, our dividend, you will probably recall that our policy is to pass on our SIOC dividend, which is Sishen Iron Ore Company, as it is to shareholders, and then we would top that up with a DV from the coal business. As all iron ore companies, you've seen the iron ore price that has really gone down, and that has impacted the earnings of a company like SIOC. They also had their own challenges from a production point of view because of the same logistical challenges that we've experienced that now has, affected that sector, and we ended up lower than we've seen in the past in terms of the DV. And the good news, though, is that our coal business, for the first time, has surpassed the value of the SIOC component in the dividend, and something that I think shareholders are really happy with. Yes, we ended up with a net cash which is quite healthy, just above 5 billion rands. If you obviously take off the 4 billion rands from the synergy business, which is very strong position from a net cash point of view. And we believe that, with the headwinds that are ahead of us, we need to really have a strong war chest and also to service our growth aspirations.
And then, of course, another big conversation is around climate change and the energy crisis in South Africa. The balance that Exxaro is striking in this regard, making sure that you're able to operate optimally while following the direction that the world is taking when it comes to climate change.
Absolutely. If you are a coal miner, you have a huge responsibility because you're mining a fossil fuel commodity, and it has got its own environmental externalities in the form of CO2 emissions. And therefore, we've committed a very comprehensive plan, which we've shared with the market in August, of how we see ourselves offsetting Scope 1 and Scope 2, and then the efforts that we're putting into the most difficult aspect of these abatement, which is Scope 3. So very much committed. We see this as our early start to our 2050 aspiration of being carbon neutral. And we really are a signatory, as you know, as a country to the UN framework on climate change. So we are on our way there. So we feel that, this is a responsibility that a company like Exxaro has got to be involved in.
Thank you very much for those insights, Dr. Nombasa Tsengwa, who's the CEO of Exxaro Resources, joining us this evening to break down the company's impressive profit growth, but also the challenges that it still grapples with, and that's, of course, the logistics. And Sally, that's all your business news for now. We'll be back in the next hour with more updates.